Builders Risk Program Manager Jeff Benson coming to you live from Jacksonville, Florida. Today we're going to talk about, I guess from an underwriting standpoint, one of my things that I don't like, but actually the way we're going to do this today, I started thinking about claims and I said, well, first of all, we need to tell them about all the current claims. So the claims I'm going to talk about today are truly the trends that we're experiencing, not only in our program, but in the line of business across the country. So they will be very modern type claims that we're having. So I think you'll find that interesting. And I try to always look at this thing through the perspective of an agent. So to me, claims are, first of all, they're a great selling tool. I've got buddies that are contractors and they'll say, Jeff, you know, that's never happened to me. I've been building houses for 10 years. But if I can say, well, it might not have happened to you, but it happened to that builder in Tuscaloosa, Alabama, you know, speaking of that yesterday, it could happen to you. So what's going to happen? What happens to your business if it happens to you? So this is a great selling point. The way I look at claims is that you don't want to scare them to death, but in a way, you need to point out the things that can and do happen. So I look at it almost as a marketing function, sales function, when you look at claims. The other thing that claims do is they make you really analyze your coverage form, because that's when it's really going to be tested. It's like, is it covered? Is it fully covered? So we'll talk about that a little bit. So we'll talk about the claims process. So without further ado, let's go ahead and get into the different perils. And I'm starting with one more based on frequency than severity. It's kind of how we look at claims. And so the first one that we're going to talk about today is, get my thing going here, theft. So what we see in the builder's risk line of business is an increase in theft claims. Now, in the last year, something happened about a year ago in March called the COVID pandemic. And so we've had in the last year a lot of theft claims. It makes sense that it probably happened because there was a lot of abandoned job sites, or at least job sites where people weren't there all the time. So we saw a spike in theft claims. They have calmed down somewhat. But the way I look at it is, what causes these theft claims? It's the building under construction. So obviously we're going to have things unattended at night. But so what's causing these things? First of all, unfortunately, employee dishonesty. We see a lot of employees stealing things. When I say an employee, it might be a subcontractor, not an employee, that actually steals building materials and tools and things of that nature. So we see a fair amount of that. The other thing I see a lot from the small contractors building these things is a lack of inventory controls. A lot of times they had a lumber package delivered. Maybe they didn't really look at it close enough, and then they come back a couple of days later and half of it's gone. And so they have a problem with their inventory controls. And I think the other thing that we got to keep stressing is supervision on the job site. You know, we have paper general contractors that are building houses. They're subbing everything out, but that doesn't mean they don't ever have to go to the job site. So they need to be on the job site, or if they have a manager, a foreman, these people need to be there. They need supervision on that job site. And the other thing that I'm going to say, we've seen a kind of an increase in delay in reporting. So something happens and a month goes by, and then all of a sudden they realize, oh my goodness, that those building materials are gone now. So they go to report a late claim, and then you have a problem. I'm not going to say it won't get paid, but it might not get paid if it's delayed too long. So there you have it. Some of the things that happen in theft. And I'll tell you a theft story that happened recently. So we were insuring a commercial building, and they had installed some air conditioners on top of this building. Well, the contractor had not gone to the site for a little while. He goes to the site. This is a multi-story building. He went to the top floor, and all of the air conditioning units were stolen. Now, this was over $100,000 claim. So I'm thinking, how did they get those air conditioning units off the top of that building? They would have had to brought in a crane to lift those up and put them on a truck and haul them away. So think about all of that happening and nobody knowing about it. So I would say that's kind of a lack of supervision. So that's just an example of a large theft claim. And we have literally hundreds of small theft claims that happen all the time. Our standard deductible at our program is $1,000, but one way to attack this would be to have a $2,500 or a $5,000 deductible. Maybe that would be you get a little credit on the rate, and maybe that's a better from a frequency standpoint. Just a thought. At least offer it to them, see if they're interested. So the other piece of this, when I think about claims, I think about, all right, now I'm telling claim stories. What could we have done to either, one, prevent the claim altogether, or to mitigate the claim and reduce the amount of the claim? So obviously, some of these seem like common sense, but this will be a good resource for you as you sit down and talk to your contractors. Just remind them of these things. Obviously, tighter inventory controls. They need to know what's on the job site. There is some sublimits built in for property that's temporarily stored at another location. There's some coverage in there for property in transit, but it still all boils down to having tight inventory controls. I threw this in there because I was thinking about it, but in this day and age, you might want to do background checks for your employees. I mean, I'm not trying to be, doom and gloomer saying this and that, but might be good to do that. And I will say, from a general contractor standpoint, you're only as good as your subcontractors. So I'm not saying you'd run background checks on your subs, but I would definitely check them out, get their reputation in the area. I would only deal with very, very good subcontractors. General contractor needs to spend more time on the job site. I mean, if they're not ever there, they don't know what's going on. They don't know the inventory. They don't know some of the basic loss control that's taking place. That's a problem. Check the job site at the end of each day. We have had so many claims that happened because nobody even walked to the job site at the end of the day. Things, tools left out unattended, things left plugged in, things like that. There's just a million things that can happen. If you simply walked the job site, you could have, if not prevented the claim, definitely mitigated the claim. Fencing, we don't require fencing. We do have safeguard warranty on higher valued risks, but for most of them we don't. But you might want to look into fencing, put up some temporary fencing. Lighting definitely helps, motion sensitive lights. CCTV, we're starting to see more and more cameras. It can't hurt. Maybe we could see who's taking the inventory and we could prosecute them and get some of the inventory back. So that would help. And I threw 24-hour security. We don't require that. It'd be very expensive. But I have started to see it work its way into the higher valued risks. So if you're writing high valued risks, the carrier might require a 24-hour security guard. That might be the future of what we're going to see. Hopefully not. So this one I thought was very apropos today. If I was on the video, I could show you out the back of my window here. We have some severe convective storms heading our way today in Jacksonville. You saw they went through Mississippi and Alabama yesterday. A friend of mine in Texas was telling me about it. So we're going to talk about severe convective storms. I just like saying that because I was talking to my college-age son, and I go, Dad, he goes, Dad, isn't a severe convective storm just a thunderstorm? I'm like, it can be, but it can be, a thunderstorm can have 50, 60, 70 mile an hour winds. So they do a lot of damage. So obviously we have tornadoes embedded in these things, and they do a lot of damage. So I'm thinking to myself, what could we do? Well, first of all, let's just talk about the peril in general. So the frequency and the severity of these storms is increasing exponentially. The reinsurers have been talking to me and they're scared to death. It used to be the tornado alley in the Midwest was a fairly, almost like a sliver, maybe North Texas into Oklahoma and Kansas. It wasn't a big area. Well, now they've expanded it because they think because of what we're seeing in frequency and severity that the area is much larger. So you're starting to see seeing all the insurance companies looking at the Midwest different than they ever have. I've seen now carriers even considering Minnesota, the Dakotas, all the way over obviously to Alabama, all considered as part of Tornado Alley today. Another thing, I had an agent from South Dakota call me the other day, and they're like, Jeff, I've never heard of a mandatory wind deductible. What is this thing? I started laughing. I said, we've lived with those for decades now in the Southeast and the coastal areas. But now the personal lines carriers mainly are starting to see these mandatory wind deductibles being used in the Dakotas. So they're being used everywhere. So sit tight, guys, because I think it's coming. It's going to be everywhere. And the other piece of this is the rates are increasing. So you're going to see a rate increase in these areas in all property, probably including builder's risk. So just kind of warning you, it's coming. You might want to tell your contractors it's coming too. So Our largest claim to date in our program was a tornado in Dallas last year that came right down on top of one of our custom homes, and it obliterated the home. So I thought to myself, could we have done anything to mitigate that claim? I don't think we could have prevented it completely, but there were some things that probably could have been done better. Maybe some inventory could have been tied down better, because it was blowing all over the place. And so those are some of the things we'll talk about, but that was one of the biggest claims we've had to date. All right, so some of this stuff I've been reading about, like things we can do to reduce the loss when you have a severe convective storm. And it's interesting because a lot of it is really based on what we've been doing on the coastal areas for years. Number one, secure entry doors. If the doors stay connected to the house, it reduces the overall claim. So you have 2-inch deadbolts, 3-inch hinges. These are some things that you're going to start seeing in all houses being built everywhere. So you're going to see more of that. You got to brace the garage doors. So the garage, you got to keep that all together, the whole unit. Impact resistant windows, something you probably never thought about in, places like Missouri and Illinois, but now you need to start thinking about that. Install wind resistant roof structures. They're going to start looking at kind of the design of the roof itself. So maybe they could design the roof a little better and it would perform better in wind events. They've been doing this for years now, especially down here in Florida. And the last one is hurricane clips. Think about that. You're not going to have a hurricane in Missouri, I don't think, but these hurricane clips keep the roof on. And we all know that if the roof stays on the structure and the garage door stays in place and the entry door stays in place, perhaps the whole building will be saved. So these things you're going to start seeing. Now it's going to increase the cost of a house in these areas. So that's the other thing you got to think about too. So that was kind of my scare tactic on severe convective storms, but stay tuned on that one. So the next thing we talk about a builder's risk always is fires. And it is funny, the fires that we've had in our program over the last number of years, I think all of them were preventable. I just, with some basic loss control techniques, if they'd been employed, we could have saved the entire building. Because most of the time in builder's risk, a fire is going to take place after hours. So our largest claim to date in fire was a subcontractor that left a metal halide light bulb on to warm some glue, and he left it on overnight and it started the fire and burned the whole building down. So now we can blame the subcontractor, that's fine. But how about the general contractor or the foreman that did not walk through the job site at the end of the day? Maybe they would have seen that light bulb plugged in and unplugged it and saved the whole building. So we see a lot of these fires are just human error and a lack of supervision on the job site. It just happens. The other piece of this is brush fire. I got to bring that up. This is but we're starting to see more and more brush fires. I read another article this week saying that because of the dry areas of the West, we're going to have more brush fires this year. So it is something that we definitely have to think about when we underwrite these risks. And I throw in unprotected risks because what we find out West is when builders are building houses right around a lot of the national protected areas, right on the edge of protection. Sometimes they're 9 and 10s, sometimes they're 7s and 8s, but they're almost unprotected, and those are the ones that are a problem because when a brush fire comes along, we got a problem. Some basic techniques you can do there is obviously you're going to see more non-combustible roofing materials being used. That would help out a lot. You'll see more and more stress on the cleaning the job site up, making sure there's no debris around the project as it's going on, things like that. So there are things you can do. We've seen some of our higher valued builders that build high valued things actually have private fire departments that will go out and protect buildings if they have to. So you're going to see more and more of this because I think that's the future. I don't think it's going to go away. So, but keep in mind what we can do to kind of help out a lot of this stuff. Going to touch a little bit on wind and hail. We kind of covered the convective winds and the tornadoes in the inland areas, but on the coastal areas, people are still moving to the coast. They're still building a lot of houses. We understand that. But we have to start, and it's kind of funny. I was talking to someone earlier in South Florida, which has been ravaged by hurricanes over the years, now has some of the strictest building codes, and they're actually doing a little better now when the storms are hitting there. So I mean, that might be something that the rest of the country has to take a look at. One thing I've noticed in South Florida is they're building less and less frame structures. You're seeing a lot of true masonry non-combustible buildings being built. Obviously, they do better in the wind. They do better in the fire. Simple as that too. So I mean, it's overall good, but it's always added a lot of cost to the project. So it really hasn't been used a lot in other areas. But now the other thing as I read is the cost of lumber is skyrocketing. So you might see more and more masonry products being used because of the cost of lumber. Just a thought, just an interesting idea. But I mean, from an underwriting standpoint, that's why we have lower rates when it's not frame. Simple as that. Existing structures, when you're insuring a renovation project and you're going to insure the existing structure, a lot of times it was built before the codes were the way they are today. So you might have more exposure. So that's why you see underwriters charging a higher rate on those existing structures. And I just threw that tornado in there. It's people say, well, what in the world can you do about a tornado? It comes out of nowhere, blows the building apart. Well, like I said, all those little things that you can do might make a big difference. That roof stays on, maybe the whole building kind of stays together. I don't know, just a thought. This is the one that's popped up lately, and it has not affected our program that much, but I have some friends in the business that write much larger projects than I write and that we write in our program. So what they're seeing is more and more water damage claims. There was one that a friend of mine told me about that they were insuring the whole building, and it was pretty much completely being gutted and multi-story building. And a contractor, a plumber, was doing some work on one of the top floors and perhaps didn't do a weld good enough or didn't put the pipes together the way they should have. And sure enough, the leak started on a Friday evening. Nobody checked on the job site all weekend. Monday they came in, and last I heard it was a $27 million water damage claim. It had flooded almost the entire building. So it was like, how could we have prevented that? Well, maybe if somebody had walked through the job site at the end of the day on Friday, they might have caught that. I'm not saying it's always going to be that way. It might have been a leak inside of a wall and nobody knew about it, but there's a good chance, or if somebody had checked on the job site over the weekend, they might have caught that leak a lot sooner. So you're seeing more and more of this water damage claims. A lot of companies have started to exclude water intrusion, which basically means you left the window open, rainstorm comes, does a bunch of damage. A lot of forms now today will exclude that. There has to be damage to the building, then the rain gets in, that would be covered. So just make sure you understand the forms of the products you're selling. And as always, property in the open. You're going to leave stuff out in the open, and then it gets rained on, there could be a lot of problems. And we had an interesting claim where they left property out in the open, and they left it out in the open for a long time. So it was like there for a couple of months, and then it got damaged by the rain, and they came back and said, well, this and that. So that could be a delay in reporting the claim. Might not have coverage for that. You got to be careful on that. So that's some of the keys, I think, to understanding water damage. But a lot of it can be prevented, kind of common sense. One of the last ones we're going to talk about real quick is collapse. One of our larger claims was a collapse, and this one's easy to talk about. We had a subcontractor we had a general contractor that was involved in a renovation project, and it was supposed to be non-structural. Everything was fine, and they were going along and they removed an interior wall and discovered some problems to some of the exterior walls. Well, the general contractor had never worked on a structural change load bearing like this, but he thought he could. Maybe he Googled it and said, I could do this. So next thing you know, he started trying to fix the structural problems. And what happened is the whole building collapsed. It was a total loss. It was a big claim. So the moral of the story was, if a renovation contractor discovers something going on with load bearing aspects of the building, they need to bring in an expert right away. And they also need to tell the underwriter, because the underwriter on that could say material misrepresentation. You didn't tell me what was going on. Might not be any coverage. I don't know. I don't try to tell you there is or not. I'm just saying that could be a problem. So it really comes down to, understanding what's going on. And I have friends that are contractors, and they'll say, well, Jeff, sometimes we don't know. I tell them, as soon as you do know, then you need to tell your agent. And the agent needs to tell the underwriter as soon as they become aware of that. We see a lot of this going on now. There's a lot of historical stuff being done. You just have to tell the underwriter in great detail what's going on with that risk, because it does change. I did throw this in here because I thought this was interesting, kind of interesting parallel. So we're starting to see more and more of the earthquake stuff being built into these things, and we're starting to see that expand a little bit too. So it's interesting that we learn from certain losses around the country, and then we kind of start building those types of building materials and even ways of building things into structures everywhere. So you're going to see more of that too. But I do get asked the question, well, Jeff, you said in your program you'll write remodeling contractors, but not structural remodeling. We don't know what that means. Well, we're pretty clear. We describe that. Things like any load-bearing aspect, any basement work, any underpinning of foundations, elevator work, staircases that are being put in or remodeled. These are all things that affect the structure of the overall building. But once again, pick up the phone, call the underwriter, tell them what you got, and we'll work with you on that. So collapse is a big problem. So there you have it. A little over 20 minutes, gave you some examples of claims, went through the major perils. What I just covered was probably 80 to 90% of all our claims fit into one of those categories of builder's risk. And if we simply did some very basic loss control measures, we can mitigate these losses or prevent them altogether. And hopefully you can use these things as sales tools to explain to your contractors what does happen. I mean, these are not made up. They happen every day. So what we're going to do now is we're going to open it up to questions. Going to answer. If you have any questions on builder's risk, whether it's claims or not, I'm here to answer it for you. And if we don't get to all of them today, I will return we'll get back to you pretty quickly on these. So go ahead, and Darcy, what do we got for questions?
All right, Jeff, here's the first question. What is the most important aspect of the claims handling process?
That's a good question. I like that. So I just got involved in a claim, and really what happened was, and it started with delay in reporting. So you had whatever happened, the builder did not report the claim on a timely basis. So then that kind of started the whole claim process off wrong. So then by the time the agent found out about it, and then the agent submitted it to the claims carrier, to the claims adjuster, and then the claims adjuster did not get back to the builder at a very quick time. So if I think the most important aspect is reporting the claim quickly, and then from the carrier standpoint or the adjuster standpoint, it's getting back to them quickly. Because what happens is, well, first of all, the builder's moving on. So a lot of times they have a claim and they fix it and then think about reporting it later. It's probably not the best way to do it either. So I would say the most important aspect is communication, quick communication by all parties.
All right. Now, is this the same coverage if you sell the builder's risk policy to a homeowner versus the general contractor?
I mean, our form is the same, whether it is the owner, developer, homeowner, or it's the general contractor. It's the same form. I will say the forms are always geared more towards covering the broad aspects of a contractor, but it's still a great form for homeowners too. So it's just sometimes the automatic coverages included maybe don't apply much to the homeowner, but all these things we talked about today would. Yeah. So good question.
All right. In the event of a claim that results in delay of completion, how are claims pertaining to soft costs paid out?
I definitely, whoever asked that question, I will call them offline after we're done with this, because soft cost is something we spend almost a whole webinar on, and it does get kind of abstracted. So I will, but I'll take a stab at this. So soft cost basically is any reoccurring claim, any reoccurring expense. So you have advertising fees, architect fees, things of that nature, insurance premiums, things that are going to reoccur. So because of a covered cause of loss, you got to rebuild the structure and you got reoccurring expenses. That's soft cost. A little plug for our form is we build in 100,000 soft costs automatically. It's one of our automatic coverages. So you don't even have to ask for it. You automatically get it. That's pretty rare in the business, and it can be increased for larger projects. Good question, but I will call them and talk to them in more detail about soft cost and delay in completion, because it is a rather intricate coverage. Good question.
All right. Now, how does the Leg 3 coverage extension apply to some of the claims mentioned, especially regarding the contractor faulty workmanship examples?
Okay, that's really, I might have to be a politician here today, and I'll compliment the question and to say I will give you a call. In the business that we're writing and the lower values that we play in, it's not being used today. It's being used in Europe. It's being used on some of the very large projects. So I don't really see much of it. I don't see any of it in what we do. But I will definitely give them a call and we can talk about that. Because faulty workmanship's always been something that's kind of built into our form, and it's built into all the forms that for the smaller projects that we insure. So, I mean, good question, but kind of, more for the very large risk. I'll give them a call. Good question.
All right. So how important is the base coverage form?
Good question. So we have 19 automatic coverages that are built in. These are coverages from soft cost, which I mentioned, property temporary under location, transit, expediting expenses. I won't list them all. There's 19 of them, and they're automatically built in. So when you write our policy through our program, you automatically get all of these coverages, and they have sublimits, some pretty high. I mean, our temporary storage is $500,000 built in automatically. So the way I look at it is that for the typical custom builder building the typical home, our coverage form, our base form is all you're going to need. So it's kind of like it's pre-packaged for you. It's all built in there. And that's something, what form you're selling, I would first go to those automatic coverages and look at them. Now, delaying completion is a good one. If you have a contractor that's going to rent something out and you got other abstract type coverages, by all means, you need to probably increase those limits. But for the typical home being built, the typical smaller renovation contractor, our form is very broad and good, and you need to make sure of that. So that base form is critical because you can't really think of everything. So hopefully you're dealing with a program that understands this class of business. Good question.
All right, Jeff, this question is regarding loss of rental income from multifamily projects. So the lease-up process doesn't begin until very near completion. Does your form provide loss of rental income in the event that leases are not yet in place?
Man, Darcy, we're going to have another webinar on delaying completion, loss of rents, and all of that. We get a lot of these questions. So write that down right now, that we're going to have another webinar in the future, probably not distant future. And we're going to cover delaying completion, which loss of rents is part of that coverage. So that's a complex question. I can't really answer it today. I'll give them a call and we'll talk about it. Good question.
All right, Jeff, I've noted that down, delaying completion. Okay. All right, next question. Besides your own claims staff, what independent adjusting firms does Victor employ for handling builder's risk claims?
Okay, so the carriers that we're involved in have their own claim adjusters. Now that's not to say if there's a cat loss or something, they might bring in some other independents. But we, at least as far as our program, we deal with carriers that have their own adjusters, and we spend time with the adjusters. I meet with them. We meet on a regular basis to talk about things like frequency and severity and what they're seeing. If they have a question on the coverage, they'll give me a call and we'll talk about it. So, I think that's a good way to evaluate a program. And maybe I left that out earlier. So when you have a claim that from a carrier standpoint or a program standpoint, that's when you're really going to get tested. When we had that tornado blow apart those homes in Dallas last year, that was our time to shine. We had to get to those contractors quickly. We had to pay them, and that was our reputation in the marketplace. So I think that's critical. So ours are mostly staff adjusters. I guess I answered the question in a long way, but there might be some independents used once in a while. Most of the time, for us, it's staff adjusters. Good question.
All right, Jeff, it looks like we've answered all the questions and we are at time.
I like that, right on time. So once again, I really appreciate your time today, taking a little bit of time in your busy schedule. We'll be doing more of these in the future. I will say we have some new stuff on the horizon. We're pretty excited, so stay tuned on that. And we'll be coming to you with some more product stuff that I think you can use. And as always, if you have any questions, concerns, or just want to talk about something in more detail, there's my contact information. You can call me, you can call Donna, senior underwriter on the program. We're here to help you in any way. And you all have a good day, and we'll talk to you soon. Take care.